Hey, Jeannie, can you hear me?
Boarding in progress.
Hello, everyone. My name's Corey. Just a minute here. Hopefully, everybody can hear me. My name's Corey. If somebody can let me know that you can hear me. John saying that he can hear me. That's good. Everybody should be coming in here real quickly. We're just waiting for everybody to roll in. Lots of people can hear me. That's a good thing. Let me see if it looks like everybody's in. We got a good crowd today. That's amazing. I'm very happy about that. That means a lot of people want to learn about taxes, right? Okay, so we're going to get started here. My name's Corey Riley. I am with the Small Business Development Center at PennWest Clarion University, and this is Tax Talk with Corey. So, somebody there is excited. I think I know who that is there. Um, the way that this training, if you want to call it, or some people call it a webinar, I like to call it a Q&A, because this is like really laid out differently than a normal training. For about the next 15 minutes, I am going to cover a specific subject, which is the home office deduction, in which many of you may be very well interested in this. And then after I am done talking about the home office deduction, I'm going to open this up to the rest of you to ask any questions that you might have. And I was late getting in. There was 21 of you waiting before I even got in, having issues with the computer and such. So we're going to kind of just go down through. I'll try to jump around a little bit instead of maybe just alphabetical order. I'll jump around a little bit to give everyone a chance to ask a question. And so in the future here, you'll be able to unmute yourself to ask questions, or while you have the question fresh in your head, feel free to use the chat option and type your question into the chat. And so I'll be sure to look at the chat if you have any questions. And as of right now, nobody has a question in there for chat. So the home office deduction. This is something that all of you are probably starting to think about because it is almost tax time. Tax time starts in January, and you're thinking to yourself, what are all of the write-offs that I can take on my tax return as a small business? Whether you are a mechanic or a hairstylist or a farmer, all types of businesses can take this home office deduction. It is rather simple in that there's really no calculations that you need to do on your own. What you need to give to your accountant, take notes on this, is you need to figure out the square footage of your office space in your house. And then you need to figure out the square footage of your living space at your house. So for your office, measure it 10 by 10 and then multiply that 10 by 10, and that'll tell you it's 100 square feet. Same thing with your house. Kind of just think of like the outside of your house, maybe, kind of measure the outside of the house, one way and then the other way, multiply those two numbers, and that'll give you your square footage. Um, Now, what is an office though within your house? The black and white of it, according to the IRS, is that it is a space in your house that is used 100% for the business. So it's not an exercise room. It's not a bedroom. It's not your living room. It's a specific piece of your house that is supposed to be 100% used for your business. Now, that's the black and white, and I'm sure, no, not many people follow that rule, okay? If you have a room in your house that you have your desk and all of your printer and all of your office supplies and such, and yet you have a treadmill in there, I'm not the black and white shouldn't be in there, but is it really gonna matter? Or if your kids go in there to play, is that gonna change it? I really don't think you need to worry about that. But I will tell you, and when you signed up to attend this Q&A today, is there was a disclaimer that the information that I'm telling you is based on my current knowledge, the rules that currently stand for the IRS or Pennsylvania or your local authority, and based on the information that you're telling me, which as of right now you're not telling me. But I guess what I'm saying is the black and white is if you have an office space, it should be 100% used for that. I know I've talked to people that use their dining room table as their office space. Some write it off, some don't write it off. So that's a decision you'll have to make. Okay. So once you figure out what your office space is and what your house square footage is, the next thing to ask yourself is, especially like if you sell inventory or if you store stuff for your business, where else are you storing this stuff? Okay, maybe you're storing inventory in the basement, and maybe you're storing stuff out in the garage. Okay, so again, think about your home office. Maybe it's a 10 by 10 room. Okay, and then you also have stuff stored in your basement, and maybe that's a 10 by 10 space. And maybe you have stuff stored out in your garage, and that's a 10 by 10 space. So if I add all three of those 10 by 10 spaces, that should be something like 300 square feet, right? And then if I take my total square footage of my living space of my house, let's say you live on a 1 story, or if it's 2 stories, you have to add them both together. And then you're gonna have to add your basement too, because you're wanting to calculate a 10 by 10 space in your basement. So you have to take the whole square footage of that basement. And then also go into your garage. If your garage is 30 by 30, and you're using a 10 by 10 space, you do have to add that 30 by 30 into your total property space. That is considered living area, but I know you don't live in your garage, but if you're going to use a portion of your garage, you got to use the full of your garage as well. So you figure out your square footages. That's what you're going to give to your accountant. You're going to give the business space, and you're going to give the total space square footage to your accountant. Now, the next thing that you're going to do is track the totals for all of your utilities: electric, water, sewage, gas, propane, fuel oil, whatever you're using to heat your house, garbage, if you have garbage at like for your personal residence, um, and also I'm trying to think what else. Oh, so well, your internet and your TV. You can write off all those things. So you take a percentage of all of your utilities at your house, and I shouldn't say. Let me back up. You don't take a percentage. You add them all together. Okay, add up for a year what your electric is, what your gas is, what your water and sewage is. Add those all up for a year, come up with a grand total for utilities. That's what you're going to give to your accountant. Then you need to figure out how much you paid in real estate taxes. You need to figure out how much you paid for your homeowner's insurance. As a business, you should have your own business insurance. However, you do have homeowners insurance. Or if you rent your house or apartment, then you're going to figure out how much you paid in rent for the entire year. Do remember that you need to keep receipts for this. And you might say to yourself, well, I can just log on to the internet and find my past bills. That is true. But if you're audited 3 years later, will those bills still show up on that website? It may or may not. So you want to make sure you print those bills and keep them in paper format, or at least if you're on the website, download it as like a PDF document. They almost always allow you to download it to your computer and then save it on your computer in a folder, or save it in Dropbox or Google Drive or iCloud, or Microsoft One something. I forget what it's called now. But make sure you save it out there in the cloud somewhere or save it on your hard drive. I do both. I save stuff out in the cloud, but I also save stuff on an external hard drive that's not connected to the internet. So, so real estate taxes, insurance, utilities, repairs and maintenance to your property. Okay. So let's say that you need to fix your driveway or you need to, fix something on the house. Okay. Inside or outside the house. Repairs and maintenance, add those all up for the year. Those will, you'll get a percentage right off of those things too. Um, Mortgage interest. If you have interest, mortgage interest, you'll want to, you normally get a paper at the end of the year or beginning of the next year, right? That says how much you paid in mortgage interest. You'll want to turn that into your accountant as well. So I think that covers about everything for the home office. So if you take in all of those totals to your accountant, along with the square footage of the business space and the square footage of the living space, the total space, okay, your accountant will be able to do your home office deduction calculation. Okay, there are some limits as to how much you can write off, and if your business isn't showing a profit, you may not be able to write anything off. But we won't dive into that too deep. My job today is to get you to track the information, give it to your accountant, and then let them do the calculations for you, do the figuring for you. Okay, so that's what I had for today. I finished up right about 11:15, which is rare for me. Anyone that knows me knows I like to talk, and so normally I go over on my little presentation. So we're gonna get to questions here. The first question I see we're on the chat here, and then we'll go to asking someone to unmute themselves. Is I have a finished attic, but it doesn't have heat or air. Can I not include that in the square footage? Um, it doesn't have heat or air. And it's a finished attic, so you must go upstairs and up in the attic, and you must use it for stuff though. Um, See, I think that could get tricky just for storage. Okay. Um, I probably no, I probably wouldn't include it. Okay, unless if you're using it for storage for the business, then maybe you're using a part of it as storage for the business, then if you're going to use part of it for the deduction, then you have to use the whole as for calculating the whole of your property. But if you're like me, I'm thinking of my attic. I store stuff up there, like decorations and things like that. There's no heat, there's no electric. I can walk up there though. I put some flooring down. It may not be quite finished like yours, but I still have some sort of flooring up there, and I do have a couple light bulbs up there that I turn on. So, but I would not include that if I was doing this for my home office deduction, unless again if I'm storing a 5 by 5 or a 10 by 10 area up there for my business, then I do got to take into account the whole of that area. And if there's some parts of the attic that there's no way of storing stuff in it, which I have parts of my attic where like, yeah, there's nothing over in that section. Like I can't even walk over there unless I walk on rafters, that I wouldn't count that. I'd count like that floor area that I can actually store stuff on. Okay, we'll come back to the next question that's in chat, but let me start at the top here. And Alyssa Fairweather, if you have a microphone and you want to unmute yourself, please do, and you can ask your question. If you don't have a question, you can unmute yourself and let me know, or you can put it in the chat that you don't have any questions as well.
Yeah, I don't have any questions yet, but all the ones that are being asked are relevant, and I thank you. Thanks.
Absolutely. You're welcome. Yes, a lot of people learn just by listening to the Q&A from everybody else. Okay, I'm going to go to the bottom here. Wonderful turnout today. Victor Ross, if you are with me, go ahead and unmute yourself and ask a question if you have a question.
I'm sorry, no questions.
Okay, okay. I'm going to go to the chat real quick now. And Kirsten is asking for the farmers, do we count square footage of barns, chicken coops, hay buildings? So the best thing is to have like for electric and things like that is to have separate meters, but I know that's not always the case, and most of the time I don't think it's the case at certain farms. So if it's all if say your electric's all on one meter, then it would probably be good to try to do some sort of study to figure out how much electric is your barn and chicken coops and other outbuildings. How much electric are they drawing for a period of time? Maybe I'm not sure who could help out with that. If you can't find anyone to help out with that, do let the SBDC know. We might be able to find somebody if you can't do it yourself. But that would be the best thing to do, because then you have like a base point to rely upon to say my barn and such requires this percentage of my total electric throughout the year. Okay, and you've based it on a study which you'd save to your computer and everything, so you have evidence of it. As for if you don't want to do that or can't do that and you just want to go by percentages, then if the barn just has electric, okay, if it doesn't have heat and things like that and just electric, then we probably would have to look at adding up the square footages of the barn and such that is using electric, and then adding that to your grand total. That should work as well. Okay, and as I say this, it makes me think about this next thing is any additional questions that you have after today. Of course, I'm going to try to answer as many questions as I can before 12 o'clock. But any additional questions that you have, make sure you reach out to your local SBDC. Some of you I know are all across the state of Pennsylvania. So reach out to your local SBDC with any additional questions that you come up with after today. And your local consultant should be able to answer that question. But if they can't, let them know, that you listen to Tax Talk with Corry, and they'll get you connected with me. Okay. And I will actually put my email in here as well. But again, I really want you to reach out to your local consultant because we're all busy. Okay. So I want you to reach out to them first. And if they can't answer your question, then come to me and I'll be glad to answer your question. Okay. Okay. Let me go back here. So the next person that can unmute themselves would be Andre. Andre, if you want to unmute yourself and let me know if you have a question. Okay, Andre is not unmuting himself, and so I'm going to move on. But Andre, if you are able to unmute yourself, feel free to jump in the next time around. Let's see here. Thomas Roberts, are you able to unmute yourself, and do you have any questions?
Yeah, I actually just dropped it in the chat. But if you have I have a second home, and I guess everything you said relating to the primary residence, I have an office in that secondary residence. Could I possibly deduct expenses in that secondary residence, just like the first residence, at a proportional rate?
Okay, yeah, and I just found this here. So what I would kind of say is, yes, I would say yes, with a lot of strings attached to it. I mean, your second home, if you're only there 10 days out of the year, okay, then I'm gonna need that calculation as well. Not me, but like if I was an accountant, I would need that calculation as well, because I'm gonna take a 10 by 10 room divided by a 1,000 square foot house. You're gonna get a 10% deduction of all of your utilities, real estate taxes, insurance, and so forth. So that's 10%. But then you say, well, I'm really only there 10 days out of 365 days. So I'm gonna have to do that calculation as well. And whatever result I get from that calculation, I would take times that 10%, and the percentage is gonna be real low. So a second home, you're definitely not there year round, and therefore I'm not going to give you as big of a deduction as I would with the house that you live in full time. Good question. Good question.
Thank you.
Okay. So he went live, even though it was in chat, but I'm going to go back to chat now. I'm kind of making a circle here throughout. So let me see the next one. Okay, Catherine, I think I missed you. I apologize. Catherine, she says, my business is not yet operating. How do taxes work with multiple owners? Absolutely, great question. So, if you have multiple owners and you're probably then set up as a partnership or as an S corporation, one or the other, either a partnership or an S corporation. They're both going to be about the same. Um, you're going to track your income and your expenses all together just for the business. Forget about the owners. The business, tracks its income and expenses. And then when you take your income minus your expenses, it is going to give you a bottom line. Okay. Now, with that bottom line there, that bottom line is going to get split between the owners. So if it's a profit of $10,000 at the end of the year for the business, and if there's two owners and it's 50-50 ownership, 50%, then that income will get split 50-50. And then so that's what, $5,000 per owner. So then 5,000 goes on the one owner's personal tax return. The other 5,000 goes on the other owner's personal tax return. Now there are different tax returns that need done. So your accountant's going to help you out with that. Under a general partnership, you're going to file a Form 1065. Or if you're an S corporation, you're going to file an 1120S. They both track your income, they both track your expenses, and they both split whatever's left over at the bottom. So even if there's a loss at the end of the year, maybe there's a negative $10,000 because that's a loss, then a loss of 5,000 goes to one owner, a loss of 5,000 goes to the other owner. Okay, so that was a great question. Make sure you're touching base with your local SBDC consultant because they can walk you through all of this. And so now, for those of you that may be new to this Q&A, and if you came in late, I went through talking about home office deduction. That's what you might have seen like on the little flyer on your computer screen or your phone or something. I do that only for like 15 minutes, and then I open it up to questions and answers so that we can answer your questions that maybe you've been wondering about, and something that you just saw here, I want to make sure everyone understands, is your question doesn't have to be associated with the subject of the beginning of this training, which was the home office deduction. It can be anything business related. I'll try my best to answer your question. Okay, let me come back to the list here. Antoinette Cobb, if you want to unmute yourself, if you can, and ask your question.
Yes, I have a question about, I have a product business for candles and skincare products that I've had for 20 years. So in the past year, I have started doing spiritual and business consultations. So I pay 8% on my products. Would I still pay 8% on the consultation because it's really an offshoot of my product business? But the payments for the spiritual business comes through Cash App. It seems like a lot.
Okay, so the 8%, is that like your sales tax you're saying?
That's the sales tax on my products.
Okay, so you're paying 8% sales tax when you're buying something from your supplier. Is that what you're saying?
No, when I'm selling, when you're selling, I'm in Pennsylvania, so when you're selling, it's an 8% sales tax that I have to pay.
Okay. Okay, so you doing that, and now your question is, do you charge 8% on what else?
So I'm doing spiritual and business consultations with clients. And so is that at the same rate or is that a different rate? Because I'm actually collecting on Cash App from that. And I think starting this year, anything over $600, you have to pay taxes on.
Okay. So so most services that you sell, that any of you sell, most services are not subject to sales tax. So you would not charge your customer sales tax on the consulting. We can all, we can always double check that by reaching out to your local SBDC, and they should be able to get you a link to the booklet that's published by Pennsylvania Department of Revenue that shows all of the products and services that are taxable and those that are not taxable. So that'd be really beneficial to get that form or get that pamphlet link from your local SBDC. But I would say, to my knowledge, the consulting, you're not going to be charging any sales tax. It's sales tax exempt. Okay. Now, if you go to sell a product as part of that, if you're going to sell a book, okay, then if books are sales taxable, which I think they are, then you're going to have to charge sales tax. Or if you create something else and you're selling a product associated with it, then the product becomes sales taxable, but your consulting service is not.
Okay. Okay.
Good.
Thank you.
You're welcome. Okay, next up is, I think, and I do apologize if I pronounce your name incorrectly. Please accept my apology. Valeska Desire, if you want to unmute yourself and ask a question. Okay, nothing from Valeska yet. So let's go over to chat. James Stover asks or states, I am very new to the business world and you have been a great help so far. Thank you. I am doing a handyman service, which is going very well. That's wonderful to hear. Do I need to submit taxes quarterly for the jobs I have completed? What if I didn't send anything in for September, but did a few small jobs? Thanks. So in just getting your business started, for most small businesses, there's not going to be a requirement to send in any quarterly payments right now. Federal government especially normally offers a forgiveness for your first time. And then after that, you better start doing it, okay? There's a lot involved here. Like one question, so you just have to answer it in your head here is, do you normally, when you file your tax return without the business, did you normally get a refund? If you normally got a refund, then I agree with what I said, that you do not need to make any quarterly payments to the IRS if you normally got a refund from the IRS. Now, if you're someone that normally owes money to the IRS, I would assume your accountant has already been giving you quarterly payments, vouchers. And so if you already have quarterly vouchers, then it's probably a good idea to add some more to that. And when you go to send in your next quarterly payment, otherwise I'd say, don't worry about it right now. If you normally get a refund, don't worry about it right now. Now the state, they're not as forgivable, but the interest rate for not paying in is really low, like 3.07%, I think, is what you end up owing on any profit that you have. And then the interest is even lower than that. So I'm not too worried about the state. However, I don't know how big your jobs have been. So if they have been pretty big and you think that you're going to take like your income minus your expenses and have a big number at the bottom at the end of the year, then it's probably a good idea to send in a quarterly voucher. And even if you miss this quarter, just make sure you send a quarterly payment in before January 15th of next year, and that actually counts to back a year. It actually counts for 2024. So you want to make sure you send a quarterly voucher in. And again, if you don't have an accountant right now at this moment to do that for you, your local SBDC consultant will be more than willing to print one off for you real quick so you could write it out and get it sent in. Okay, I think that was all the questions here on that one. Yes. Okay, let me find another person. How about Andrea Gonzalez? Do you have a question you'd like to ask? Okay, what about Olga Renteria? Do you have a question?
No, I don't, but I am very interested in just learning, and this is my first time joining. So I'm very happy for all the information and all the questions. Thank you.
You're welcome. Yes, and I'll plan on you being a regular. Okay, I do have some people that are truly regulars, come back like every month, not necessarily with questions. They just come in to listen and learn from other people. And sometimes I think that is the best way of learning, is finding out what other people are thinking as well. Okay, so John Thomas over here on the right hand or in the chat, sorry, is asking, is it reasonable to use home office square footage percentage and apply it to internet cost, and same for phone cost that is also shared with personal use? Yes. If especially like if say you have a landline, if you have a landline, then yes, you can use a percentage of that. That's the way I understand the rules there with the IRS. And so apply to internet costs, and same for phone costs. Yeah, and so the internet in your house, okay, you're going to get to take a percentage of that based on the square footage of the business space and the square footage of its total space. You'll get a percentage of your internet expense as well. Great question. Okay, let me see here. How about Anne? And your last name is spelled Xie. So if you want to go ahead and unmute yourself and ask a question, I'd be glad to answer that. Try to.
No questions for now. Thanks, Corry.
You're welcome. Okay, I'll go down here then. So what about Lily Pergola? Do you have any questions?
I don't have any questions at the moment. Thank you, though.
You're welcome. Okay, I'm going to go over to the chat then. So the next one is, I believe mortgage interest is a valid deduction. And then in parentheses, not the principal, because that is debt repayment, but the interest is. Please confirm. Yes, that was something I had mentioned there, along with your utilities, real estate taxes, homeowners insurance, mortgage interest, rent if you're paying rent instead of the mortgage interest, home repairs and maintenance to your property. So yes, mortgage interest would be. And yes, it'll follow the same percentage test as the utilities. Good question. And then yeah, the one thing I would say, so in what you previously asked there, saying about not the principal, because that's debt repayment. There's actually a space where your accountant can put the cost of your house on there, and then you get what we call a depreciation deduction for your house. So that's why we only take mortgage interest over there, because when we dive deeper, we can write off depreciation as well for the entire property. Okay, then she has a second question, just kind of like in the same post there. So I'm going to go ahead and read it as well. It says, do you have a recommendation as to when establishing S Corp tax filing status could likely be more beneficial? I started my company in July of 2024. Great question. And not related to home office deduction, but again, I open up the doors to all business related questions, and I'd be glad to answer this. So it sounds like, well, you just opened in July 2024. It doesn't sound like you're an S Corp right now. So you're either a sole proprietorship, partnership, or an LLC.
Correct. I
And
established as an LLC.
okay, good. And so she's an LLC, and so as an LLC, you're either a sole proprietorship or a partnership, depending on how many owners are in your LLC. And so when would it be beneficial to become an S corporation? What I would say is it depends on when you are showing a profit on your tax return. So if you're showing a loss on your tax return, then it's not real beneficial for you to do this. It'll come down to when you start showing a profit and if the profit is large enough or not. I am very quickly, while I'm talking, trying to waste a few minutes, a few seconds here as I come up with a slide that I want to share with you that I think you'll find extraordinary. So I'm almost there. Okay, and let me figure out how to share my screen with you now. And hopefully you can see it. If you're on your phone, I guess it might be really hard to see it. Okay, there. I can see that I shared the screen with you now, so hopefully you can see this. And I'm going to go over this really quickly with you, okay? This comes from our SBDC, the PennWest Clarion SBDC. This comes from what we call our first step webinar. It's a training talking about the first steps to starting a small business. Now, even if you're already in business, I promise you this training is probably very beneficial for you as well. Normally, it's the existing businesses that take a little more away from it because when they hear something they need to know they need to know it. Whereas startups, they're not sure what they need to know yet. Okay, so what you'll see here on the left-hand side of your screen is the sales minus office expenses or other expenses. Let's first talk about that, okay? And so 100 minus 50 is going to give you 50. Now, as an S corporation, you're going to have to take yourself out of salary or you have to pay yourself. So that goes into answering your question. When's the right time to become an S corp? Well, are you making enough to pay yourself? And then the question is are you making enough to pay yourself a decent salary? So as in this example here, we subtract that away and it gives you a profit of $15,000. Now, on the paycheck that you're paying yourself, you being with taxes withheld out of your paycheck, you have to pay what we call Social Security and Medicare taxes. We've all heard about that, right?
Mhm.
And then up here, the S Corp has to match that amount as well. So that's why we show that to you on the screen here is because, this is an expense for your business that you're going to have to pay. Then when we come down here to the bottom, you have this $15,000 that was still left over from the business. This is still considered profit. And the cool thing about an S corporation, and I'm trying to cram a lot into just like a couple moments here. The cool thing about a S corporation is on this 15,000 profit after you've paid yourself and after you've paid all your expenses is you only pay federal income tax and state income tax on that amount. You do not pay local income tax on the 15,000 and you do not pay the numbers over on the right hand side. And as since right now you're like an LLC sole proprietorship, there's what we call self-employment taxes. That's what the Social Security and Medicare is. That's considered self-employment taxes.
Mhm.
And so on the 15,000, you don't owe any of that. Okay. Now, you might be like, okay, well, I'm showing a $5,000 profit, even after I do get done paying myself. So is it beneficial to be an S corporation? Do understand that you have to file a different tax return then, and normally it's going to be the S corp's normally going to be a more expensive tax return. You also have to do payroll for yourself. Okay, now if you're already doing payroll for employees, it's really very little additional cost to add yourself to payroll. But if you're going to be the only person on payroll, then you got to take into account the cost of paying to have it processed. Either you do it yourself and you'll pay a fee, or you'll pay an accountant to do it for you and you'll pay a fee. So you have to take all of those into account. But if ultimately your profit at the end of the year is large enough for you, then and you're paying yourself a decent salary, then I would say it's probably a good idea to become an S corporation because you will save on taxes.
Okay. And you have to file for S Corp status quickly within the start of the new tax year, right? So I would need to make that decision pretty quickly in 2025.
Yes, in order for 2025 to be considered an S corporation, I believe I just looked this up last week or earlier this week, and I believe it is the March 15th.
Okay.
Okay, I think when you read the rules, it's 75 days after the beginning of the tax year or after the end of your tax year. So that'd make it like February 15th is when it's due.
Okay, great. Thank you, Corey.
You're welcome. Okay, let me see here. I got to bring stuff back up here because I was moving around. Okay, let me start up here again. Let me see. Carly Lavelle. Carly, do you have a question for me?
No, nothing from me, thanks.
Okay. Next question. Jere, Jer?
That is Jerry. Thank you. I have no questions. I'm learning a lot from all the other participants. So thank you.
Okay. Great. Okay, I'm going to go over to chat now. Chat is Victor Ross, and Victor says, I am still in startup mode. That's awesome. And have not sold a single product. That's okay. I do have research and development costs now. Can or should I file this this tax year? So research and development costs, I'd have to do some research on that one. I'm not going to try to speak to that as to details, because I do know there are some different roles out there for research and development. Now I'm going to dumb that down for me a little bit and say that if the research and development is kind of more of like startup costs, leading up to you like starting to sell stuff here real soon. Okay. I mean, if you're not going to be selling stuff for like another year or 2 years or more, then yeah, that's going to fall under the different research, research and development. But if you're like just going through some research and development, just getting your business up and running, you're going to be starting here like real soon, then do you file a tax return this year? There's some rules on that, what we call startup costs. And again, I kind of have to look at that to get you some definite answers. So what I'd say is reach out to your local SBDC first to talk to them about how can I write off startup costs? And if they can't answer your question, then feel free to get back in touch with me, which I put my email in the chat. So startup costs, I do believe the number is $5,000. So if the startup costs are less than $5,000, and say you incurred them in 2024, what you would do is, and if you're not going to sell anything in 2024, but you're going to start selling stuff in 2025, then wait, and run your business in 2025. And then when you file your 2025 tax return, then you'll be able to pull those costs from 2024 into 2025 as what we call startup costs. And again, I think it's less than $5,000. You can write it off completely in that first year. If it's more than that, or if that threshold is different, if it's more than that threshold, then there is what we call capitalizing. Think of it as buying an asset, and you have to write that asset off over a number of years. That's called depreciation. Startup costs are not so much physical. So the word depreciation, it's the same as depreciation, but it's a different word. It's called amortization, but it's the same thing. It gets written off over a certain number of years. So I'm not sure exactly where your research and development is going there, but trying to hit upon a little bit of everything for all of us. Okay, let's come back here and see. We're doing great on time. Donna Miller, how are you doing, Donna? Do you have any? Oh, Donna has a chat over here as well. So how do I reflect more than one business sharing the same space? Of course, you've got to make that complicated, don't you? How do I reflect more than one business sharing the same space? The black and white of what I think you should do with this is thinking of it from a tax standpoint. Okay, so when I'm saying I'm thinking of them, I'm in my head, I'm looking at the tax return, trying to figure this out for you. I'm going to keep it simple, as in you just have a home office in your house, okay, and you have two businesses, and you're gonna do all the office work in that office space. So once we do everything that we talked about earlier with square footage and adding up all utilities and all that other stuff that we talked about earlier, then ultimately once we figure out what your total home office deduction would be, we would then go ahead and split that in half. And so half of that would go on one business tax return. The other half would go on the other business tax return. Now, that's like the general view of it. The more detailed view is your accountant is probably going to take the percentages, okay, the square footages, not the percentages, but the square footages, and he's going to put it on both businesses home office deduction form. And then you're going to have like total utilities. Okay. He's going to take the total utilities, he's going to divide it by 2. And he's going to put half of it on one form and half on the other form. Same thing with real estate taxes and mortgage interest and all those good things, insurance. He's going to split them in 2, and he's going to put them on the 2 separate tax returns, 2 separate tax forms. And then it's going to do its calculation, because again, your home office deduction is based on how much profit or not profit your business shows. So if one business loses money and the other business shows a profit, then by your accountant splitting this stuff up, you may get a write-off for the profitable business, but you may not get a write-off for the losing business. Now, with that said, I'd have to double check, but I'm pretty sure that if you don't get to take the benefit this year because your business is showing a loss, but you calculated it all out for home office deduction, it actually carries forward. So that means that you'll have home office deduction that you didn't take this year that you may be able to take the next year. Okay, almost 100% sure that's available to you. And your accountant takes care of that for you. That's why you really want to have an accountant for those things. Great question. Okay, let me see here. Ethan Bell, do you have any questions, Ethan?
I do not. I'm just listening, and it's a lot of very valuable information. Thank you for your time.
You're welcome. And this meeting is being recorded, so this should be available on our YouTube. I won't say like right afterwards or even today, maybe tomorrow or something, or a couple days, but it should be uploaded onto our YouTube. And my fault, but I haven't been consistent at getting these recorded. So I applaud my training coordinator, Jeannie, for making sure it happened this time. So when you go to our YouTube, just do a search like for PennWest, Clarion, SBDC. And then when you get to YouTube, click on playlists. And she has created a playlist of just of all the tax talk with Corrys that we have recorded. Okay, let me find another person that wants to talk to me. Okay, Gregory Chambers is next, and I see he put something in the chat here, so I'll go ahead and read his chat. What qualifications do you look for when choosing an accountant or tax consultant? Is there a website or list that tracks accountants, tax consultants that have a bad record? So let me first answer the first thing. What do you look for, an accountant or a tax consultant? Definitely look for someone that has business experience, which is most well, if you're in rural Pennsylvania, most accountants, all accountants probably, at least with sole proprietorships, LLC sole proprietorships, then you may, if you're a partnership or you're an S corporation, you're going to want to make sure you ask any accountant if they have experience with partnership tax returns or S corporation tax returns, because those are more complicated, and definitely the bigger your business gets, the more complicated it's going to become. So ask them if they have experience. That's about the best you can do. I mean, even when I went, like, I have my own type of business, and so when I go to different professionals for a service, I kind of rely on them, and I ask them, I'm like, do you have this kind of experience? And if they say yes, if I haven't heard anything out in the grapevine, I almost got to go with that and just assume that they do. It may turn into a bad thing. Okay. I mean, I changed investors, a few years ago, and bad decision. Okay. Now I'm trying to get all the money out and put it somewhere else. Okay. It was a bad decision. Probably worst decision I made. So, for a while. So those are the things that you have to, try. Sometimes it just doesn't work out for you. Now, do they have experience? That's the biggest question I'd ask you. And of course, price might matter as well. There are what we call CPAs, certified public accountants. There's also EAs, which are enrolled agents with the IRS. And then there are general accountants / tax accountants who do not have that CPA license, do not have that EA certification, but they do have a ton of experience. They may have been doing accounting for a decade or for decades and have tons of experience. The least expensive is going to be a general accountant, and then EA, and then CPA. Also, you have your big boxes like H&R Block, who can do business tax returns, and what is it, Hewlett something or something like that, another big box store that can do business tax returns as well. They're normally quite as expensive, just as expensive as a CPA. So you can make your decision from there. I would, if you have further questions, talk to your local consultant, or feel free to reach out to me. We can have more one-on-one conversations about that. So is there a website or list that tracks accountants, tax consultants that have a bad record? So the IRS has a list. Trying to think of what it's called. I'm doing a little search here. Annual filing season. Let me type it out there. Annual filing season program search. Pennsylvania. Let's see what that comes up with. Okay, so if you, yeah. Okay, I'm going to copy this into the chat. Gotta love the internet, can do this stuff fast for you. So this here, I just copied into the chat to answer your question on there. The IRS does have a website where you can review an accountant's credentials and qualifications. And I do believe that it will tell you if they have bad stuff going against them. Okay. You just have to do a search there and see what comes up, see if any names come up that way. Okay. But that's a good way to check it out. Of course, talking to people, someone's always gonna have a bad experience, someone's always gonna have great experiences, right? So just like when you're looking at reviews online, take them with a grain of salt, as well as, look at how many there are of one, like positives versus negatives. Okay. I go to restaurants all the time, and one time I might have a bad night. Does that mean I'm never going to go back again? Absolutely not. I'm going to go back again. Now, if it continues to happen, then yeah, I'll make that decision that it's not worth my time and money to go back there anymore after it's happened over and over again. But once or twice, once in a while, or just once in a while, it's going to happen. So I think that'll happen with accountants as well. Good question, though. Great question. Hey, let me see. You're welcome. Let me see here. Okay, I'm going to come over here and check. I'm going to do one more chat here. And if there's anyone that wants to unmute themselves, they can do that after this next chat that I answer, because I think I hit everyone, but I'm about to miss someone if they came in late, or I just skipped over them. So let me see here. Thank you, John. John Thomas is saying, I learned something at each session. It's a great discussion. Yeah, John is one that comes back monthly, and so is Holly, who's the next one here. Can I have a copy of the First Step Basics of Business? I don't think I got this at my beginning. Okay, so yeah, absolutely. That First Step webinar PowerPoint that I was telling you about, if you want a copy of that, I'll put my email down here again, and you can shoot me an email, and I will be glad to, and maybe email me and ask for that. Okay, say, hey, can I get a copy of the First Step Basics of Business thing? And absolutely, I'll get that emailed off to you as a PDF. Okay, Gregory Chambers is saying, what qualifications? Oh, no, I already read that one. Okay, I think I got all the questions there. Anybody have any more questions they want to put in the chat, or go ahead and unmute yourself and ask a question as well? While I'm waiting to find out if somebody jumps in and asks a question, again, unmute yourself, because I'll hear you and then I can stop. But again, we do hold this training every month. As you saw, it didn't cost you anything. You did hear, if you came in at the beginning, you did hear a little piece of information that I shared with you, and then we opened it up to Q&A. I have accounting experience, of course, so that's why we bring this tax talk with Corry to you. I know I've had people from all over the state. When we're talking about 8% sales tax, we're probably talking about the Philadelphia area. So I'm over here in Western Pennsylvania talking to you over in Eastern Pennsylvania. So I hope you learned a lot here today. I do have a question, so I'm just going to quit talking and ask this question. Is there a limit to the number of independent contractors you use in a year? Never heard of that, no. So you can have as many independent contractors as you need. Now, I'm going to take that another step, okay, is there's a thing that we call independent contractors, or some of you call them subcontractors, or maybe just contractors. And then there's what we call employees. And that's like going to work for Sheets or something, right? So we want to be careful when we classify somebody as a contractor, but are they maybe truly an employee? And the government does really watch this. So what's the difference? An employee is somebody that you tell them when to come in and when to leave. You tell them what to do while they're there. Okay, you're overseeing them and you're managing them and leading them, giving them guidance. In addition to that, you're also giving them the tools to do the work that they need. So let me see here. If you're a subcontractor, if you're hiring a subcontractor, you're saying, I need this job done. I need it done by this date. And you could even kind of give an area of like, hey, I need it done between this and this date. But as for what time they come in the morning, or what time they go home exactly, or exactly what day they come in, is really up to them. And then also they bring their own tools with them to do the work. And on top of that, they do the work how they want to do the work. You might put out there some specific limitations like, hey, I need you to use this material because this is what I quoted somebody, okay? But I need you to use this material and it needs to be this size, okay? I'm thinking kind of like a contractor, especially like contractors that build houses. Sometimes they don't do they don't do the excavation, okay, for the basement and such. And so, hey, I need it to be this dimension and I need it done by this time. And the customer wants it to be cement blocks instead of, something else. So you can give some limitations, but they got to have the flexibility to do the work how they want. And that contractor probably is not going to stand there and watch the hole being dug the whole time. Okay. The contractor said, this is how the size and what it needs to be made out of and such. Go to work. You do it. Okay. I'm going to go over here. I'm going to do my work. And whenever you're done, I'll come back over here and do the rest of my work. Okay. So do watch out for that subcontractor versus employees. Donna is saying, thank you. Your Zoom sessions are a good opportunity to learn about business practices. That is my reason for attending. Thank you very much. Okay, I think that's everything. Unless somebody has one more question, I'll let you shoot out one more question, but otherwise it is 12 o'clock.
Can I squeeze in one more question?
Okay, I hear two people. Go right ahead.
Is there a threshold for a brand new business that they have to file a tax return in their first year?
Great question. Black and white of the rules are that the government say that if you make $1, then how they say it, earn a dollar, claim $1. Okay. Now with that said, if you are like a sole proprietorship, if you make under a certain threshold, then you don't have to file a tax return. Let me see something here.
Like with my business, I started in July and I've had a number of expenses related to getting off the ground, right? Website design, things like that. So the money that I brought in, really, it's barely covering my expenses for the first 6 months. So am I going to be expected to file a business return?
Yes, because you have expenses as well. That's something I
Okay.
wasn't taking into account, so I'm glad you brought it up. Because you have expenses and you have made a little bit of money, you do want to file. You have to file a tax return, and you would want to file a tax return because if it's showing a loss, then that might benefit you on your entire tax return, like subtract
Right.
away from other income and give you a bigger refund.
Yeah,
Now,
my W-2, exactly. Yeah.
yeah, exactly. And the IRS says that if you make less than $400, this will be after expenses. If you make less than $400, then you don't have to pay self-employment taxes.
Okay.
So if you make more than 400, you do have to pay self-employment taxes. So overall, if you did have some income and you did have expenses, absolutely file a tax return.
Perfect. Thank you.
You're welcome. Next question. We had one more.
Yes, this is Andre. Thank you for taking the time. I really appreciate everything you've said so far. I just have one question, right? So I did my LLC, and when I did it, I put as one person, so I'm taxed as a sole proprietor. And I just learned now after the fact that I got do the Schedule C form when I file my taxes. That'll go with my regular, or essentially off of my Social Security number. So my thing is that I would like to file it completely separate off of the EIN number. So I guess now I have to file a form to change it from sole proprietor to, I guess, member managed. And I just wanted to ask, like, what would be the benefit of doing that besides where the taxes is off of the EIN and not the Social Security number?
Okay, that is a great question. So when you say member managed, that makes me think that you've been told to file an LLC, because as an LLC, you're considered a member of the LLC versus like a, say like a corporation, you're a stockholder. So so right now you're a sole proprietorship, and you're thinking you might need to become an LLC. I'm going to say no, you don't. When we're specifically looking at at the EIN number, a sole proprietorship, you can get an EIN number right now as soon as you get off the phone with me, and in less than 5 minutes you'll have the EIN number for your sole proprietorship. You're going to go to irs.gov, like the abbreviation for government.
Yeah.
irs.gov. And when you go to their homepage, I don't know what it looks like on your phone, but on a laptop, on a computer, when you go to their homepage, it's right in the middle of your screen from left to right. Just scroll down a hair and you'll see there, without me going to it, but it'll say something like obtain your employer identification number, and in parentheses it'll say EIN, something like that. It's free to obtain, doesn't cost anything. So if you happen to do a typo of that website and there's a cost for it, don't pay anything. Okay, it is free, and I've had people argue with me, so I'm just telling you it's free. And so you'll fill it out with your sole proprietorship name. I'm assuming you have a business name. Do you have a business name?
Yes, I've gone through all that process. So I did it with the state of New Jersey. I'm registered and everything in the state of New Jersey. I got my EIN and everything already. It's just when I did the EIN, that's when they asked you for how many people are in the business, and that's why I put one. And that's when it came up saying that, all right, well, even though you're LLC, you're considered sole proprietor because there's only one person. Where if I had chosen two, then I would have been considered under a different tax bracket, where I would file the taxes under the EIN number and not the Schedule C form on my Social Security number.
Okay. And so you said that you were filing this in New Jersey, right?
Yes.
And what website were you on that you were filing this in New Jersey, the LLC?
New Jersey's the official government website. I forget the exact one where I created the business, and then I went to the IRS website and created the EIN.
Okay, that's interesting. Okay, so yeah, so when it comes to New Jersey rules and laws, I'm not going to be able to talk about that because I don't know anything about other states. But when you go to the EIN's, the IRS's website to get an EIN number, I have never ever, so you almost need to have an SBDC consultant sit with you maybe, and you could share your screen via Zoom or something. And if your local consultant can't help you, I do please ask you and beg you to go to them first because they're local to you. But if they can't, come to me and I'll be glad to do a share screen with you. Because I've never ever seen where a sole proprietorship with 0 employees, that is an exception. If you're a sole proprietorship with 0 employees, you do not need to have an EIN, but you're an LLC, so you have to have an EIN. You have no choice, okay, to not have an EIN. So, so you should be able to get one on IRS's website. So there's something going wrong there. You definitely don't put in that you have multiple owners, because that'll change everything. Okay. You're still your own owner. And so you do need to get an EIN number. And now you're mentioning that you are an LLC. So that's even different from just being a sole proprietorship. It can be done. I know it can be done. So what I would say is reach out to your local business consultant at the SBDC closest to you. See if they can help you get your EIN number. Okay.
Okay, perfect. Thank you.
You're welcome. Okay, well, everybody, I am going to let you go. I still have like 10 people that stuck around to listen, and that's great. Happy Thanksgiving to all of you, as John Thomas put in the chat there, and to all of you that said thank you. You are very welcome. I'm so glad that you came in and sat with me today, and I hope that you learned something. And we'll be back here again next month. Watch for it on wherever you found this one at, either via a newsletter or something like that. And we'll be doing it again next month as well. Take care, everyone. Bye-bye.